This week, while China was putting forth a 12-point plan to help halt the ongoing conflict between Russia and Ukraine, which started 1 year ago, China's foreign ministry spokesman, Wang Wenbin, ratcheted up some blusterous anti-United States rhetoric, stating the following in his press conference yesterday.
担忧的是美国对世界和平稳定起到的破坏性作用。美国是最大的战争制造者。美国建国240多年的历史当中，只有16年没有打过仗。二战结束以来，世界上发生的武装冲突当中，由美国发起的占到约80%。美国也是侵犯别国主权、干涉别国内政最多的国家。据报道，二战结束以来，美国试图推翻50多个外国政府，粗暴干涉至少30个国家的选举，试图暗杀50余位外国领导人。美国还是挑动阵营对立对抗的最大源头。美国领导下的北约对阿富汗、伊拉克、叙利亚的战争，导致超过90万人死亡，3700万人沦为难民。美国的霸权政策和好战倾向延续一天，世界就将一天不得安宁。
With government central banks now buying more gold bullion in volume not seen since before World War II, we are again left to wonder, what are government central banks planning for the next financial system, as this current fiat US dollar-dominated version wanes in utility and popularity? The Global Central Bank of Central Banks, the Bank for International Settlements, published the following diagram in October 2018 in Bloomberg's Money magazine, outlining their plans to change the financial order of things to come. The BIS had their chief go on Bloomberg this week to talk a bit more about their developing plans.
You have a vision of the future monetary system, a unified programmable ledger. Give us a sense of why and what the vision hopes to achieve eventually.
What we want is to lay the ground, the infrastructure for a modern financial system. Now, the technology is moving very fast. We have a very solid foundation, so the idea is basically to use that solid foundation, incorporate the new technologies, and facilitate the development of a future financial system.
What gaps in particular are you trying to fill?
Well, one, of course, is that financial system, as efficient as it is today, is still full of transaction costs, compliance costs too. So one very important motivation is to reduce those frictions as much as possible. The other thing is to onboard more people more easy. For example, one of the main issues related to lack of sufficient inclusion is that precisely transaction costs are very, very high. Therefore, to manage small payments or to give access to small firms, so small, medium-sized enterprises, or services to people in remote areas is still a major problem.
One of the priorities for the BIS in 2023 is to focus on stable coins, on CBDCs as well. I'm just wondering, in terms of regulation, what additional regulation do you foresee that's needed?
Well, in terms of, yes, cryptocurrencies need to be regulated. It is obvious now that it is necessary. Certainly aspects of consumer investment protection is very important. And well, of course, also focusing on the exchanges. The exchanges are key. How some of these activities interact with the traditional financial system. Some should be valid, some should be tolerated, and those are the ones we should regulate.
What do you think is impacting the views of central bankers the most right now when it comes to the crypto ecosystem? I mean, how much of it has to do with the FTX incident, for instance?
Well, you know, a few years ago, crypto assets and cryptocurrencies were in a way put as an alternative to fiat money. I think that battle has been won. Technology doesn't make for trusted money. The most important aspect is for these activities not to have a systemic impact. I mean, at the end of the day, if this grows dramatically and we have events like FTX, that at some point could have a systemic impact. And that's something that we want certainly to prevent.
India, which is hosting the G20, is pushing for greater regulation on cryptocurrencies. What conversations are you expecting at the G20, and where are they in those conversations?
I would say the most important body of the G20 that has to do with financial activities is the Financial Stability Board. The Financial Stability Board, where ministers of finance, regulators, central banks get together and they decide, I would say, the main rules of the game, I would say, for the international financial system. I anticipate a strong statement in favor of regulation. It will be up to each country to decide which particular approach they will follow in terms of the alternatives that there are out there.
Hello, on behalf of SDBullion.com, this is James Anderson with your weekly bullion market update. Before we go any further, smash the like button so we can share this content with other like-minded sound money stackers. Subscribe to our YouTube channel for more complimentary weekly updates to come, and don't forget to enter our free bullion giveaway.
SD Bullion's Silver Eagle Monster Box Sweepstakes is back, and with it, another opportunity to win 500 Silver Eagle coins just like this guy.
Yeah, this is Kevin.
Hi, Kevin. This is Dr. Tyler Wall, CEO of SD Bullion. I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of 2022 Silver Eagles.
Unbelievable. That is awesome. Sorry, I'd be a lot more excited, but I'm at work, so I can't really scream and holler too much.
So click the link below, because the next big winner could be you.
The silver and gold markets continued selling off this week, with the spot silver price closing just under $21 an ounce and the spot gold price finishing just above $1,800 an ounce. The spot gold-silver ratio climbed higher to close at 87. Checking on where the respective 200-day moving averages are currently for the spot gold price, it's at $1,776.27 per ounce, and the spot silver price's 200-day moving average has just been breached below $20.97 an ounce. Inflation continues to come in hotter than expectations as this week's core PCE data came in higher than expected. The financial market thus ratcheted up bets for higher interest rate hikes to come. The U.S. real estate market continues being clobbered, with too high of interest rates and high home prices crushing homebuyer demand back to levels lower not seen since before the 2008 financial crisis fallout in home buying. In terms of how much house, gold, or silver bullion can buy you at the moment, we are still well elevated above the respective 2011 and 1980 lows. As I mentioned last week, the declines in spot gold and silver prices over the past month have more or less been mainly relative to the fiat US dollar strength. Since the start of this month, you can see the inverse relationship between the spot gold price and relative fiat US dollar strength, and you can also see a similar inverse pattern in the spot silver price versus fiat US dollar index. It's also formed since the start of this month. The CFTC still has not published its weekly commitment of traders report, leading many market traders and onlookers to openly speculate as to what is happening below in derivative trading mechanics. Fred Hickey tweeted the following on the matter today. Finally received a COT report through January 31st, 2023, though it doesn't reflect biggest gold drop February 2nd and 3rd, close to a $90 plunge, so pretty useless. Nearly 60% of correction to date occurred over those 2 days. Therefore, we'll get a better read by next Friday. Outrageous delay of important data. Longtime gold derivative trader Garrick Morin tweeted, still no COT report, but collapse in open interest, then heavy volume into backwardation today suggests U.S. money managers are now likely short gold futures. Last time they shorted gold into record central bank gold buying demand was last fall at the bottom. One of the most salient points on current COMEX gold futures market open interest levels was made by Michael Say last week, who pointed out the following. Yesterday, COMEX gold open interest hit 422,983 contracts. If it drops below 422,100, it'll be the lowest open interest since December 19, 2018, when gold was priced around $12.50 an ounce. Of course, this is occurring as both eligible, the yellow pile in this chart, and the registered ounces, the red pile in this chart, of combination counted London and COMEX gold ounces underlying have been rapidly diminishing over the past year plus in gold. A similar but even more dramatic story for COMEX silver futures market open interest at the moment, where we would have to go back to the onset of the 2012 silver cyclical bear market to find as little open interest in silver. So, obviously, there's no hot speculative leverage money chasing into silver or gold derivative markets yet. As for the physical United States bullion market, price premiums have been consistently shrinking closer to spot, and for those looking to add to their physical bullion positions, doing so when spot prices get near the 200-day moving averages is typically well-timed. Take advantage of this current calm before the inevitable next wave of financial crisis comes about. That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.